look back carefully, you'll see that in some of the prior halvings, it actually went down for a little bit before that price run began. It took a while. There was like a lag effect for the halving to have an effect on the price. And so it's entirely possible to me that that would occur again in this particular time frame. As I said, Bitcoin's a wild animal, and you just don't know on any given week, day, month what it's going to do. I mean, it could go to 50, it could go to 80. I will say this. I will say this though. I have great confidence that in a year or two, it's going to be much higher than it is today.
Prepare to delve deeply into the perspectives of equity management associates managing partner and seasoned Bitcoin investor Lawrence Lepard. In this unique video, Lepard shares his optimistic outlook for the future of Bitcoin in 2024 and 2025. Prepare yourself as he explores possible price objectives, predicting a sharp increase with estimates between $100,000 and $300,000 for the current year. Lepard is unwavering in his optimism despite Bitcoin's well-known volatility, stating with confidence that a realistic estimate of at least $100,000 within the next year is achievable. Join us as we showcase clips of Lawrence Lepard analyzing the future of Bitcoin in light of the macroeconomic environment. Stay tuned until the very end as Lepard explains why, in the current unstable economic environment, Bitcoin's popularity is becoming increasingly important. Take a seat, relax, and enjoy this insightful discussion. Thank you for watching. Let's hear what he has to say.
Boy, it's a wild animal and nobody can really know. I mean, long term, I'm highly confident that it will continue to outperform and be much higher. And by that, I mean by the end of this year and next year, the following year. Short term, it could do anything it wants. As you know, it's quite volatile. I think what's going on in Bitcoin is just the knowledge, very much like gold. I mean, and I do consider, gold is 5,000-year-old money. It's the soundest form of money ever until Bitcoin came along. And it's analog sound money. Bitcoin's digital sound money, and I think that what's going on there is you're just seeing more and more people becoming aware of the fiscal and debt problems that the world has, and looking for an escape hatch. Gold's one, and Bitcoin's another. Turns out Bitcoin has performed better than gold, so younger people tend to aggressively go towards Bitcoin. But as you point out, it has been correlated with the Nasdaq. It has been correlated with risk on, and it does tend to have pretty wide swings, and so it's not suited for everybody. There are people who, prefer not to have the volatility, and they might, and they're looking for a sound alternative. They might choose gold. In turn, if you're looking for the most rapid growth on a performance basis, Bitcoin has clearly been the better choice for the last 10 or 15 years, and I think it will continue to be a better choice. So, but it's come along too. And to me, as I said, I think earlier, these are both the canaries in the coal mine. The fact that they are both up as big as they are. Bitcoin's up 66% in the quarter. Oh my goodness, that's a big number. Gold was up now 13, 14% in the quarter. That's a good number too. Just annualize those are huge numbers. So something's going on here. The fact they're both up together and the stock market wasn't up that much. Something's going on here. And what I submit is going on is a larger percentage of the world is becoming aware of the monetary problems that are about to emerge, because the Fed is trapped. And I think at the end of the day, they can say they're going to go higher, they can say they're going to go lower, they can talk all they want, they can jawbone, they do all kinds of things, they lie about what they're doing. But at the end of the day, if push comes to shove and the choices are do nothing and let the system collapse, or print money and create new programs to accommodate the system and dilute the value of the dollar through debasement, the politicians, they will always choose option two, because as we saw in 08, in 2020, in 2019 with the repo blowout, in March of 2023 with Silicon Valley Bank, they are not going to let the system collapse, full stop. They can't. They just won't do it. But what makes it so hard for all of us is they tend to, in the interim periods, they tend to talk tough and imply that, they've got it all under control and we're going back to 2% and da-da-da-da. But, again, I think what's going on is gold and Bitcoin are saying, bullshit. You guys can say all that stuff. Yeah, we hear you. That's what you're saying for sure. But you know what? Bullshit. We don't believe it. We'll take the gold and Bitcoin. Thank you very much. At the end of the day, the block reward, whether it's 6.25 or 3.125, it's the difference between 900 Bitcoin a day and like 450 Bitcoin. That's not the biggest determinant of demand, in my view, of supply and demand in the market. That's a small number compared to the 19 million coins that are out there. It has an impact, and historically, there's always been a price run after a halving, if you look back historically. So I fully expect we will have a price run. But if you actually also look back carefully, you'll see that in some of the prior halvings, it actually went down for a little bit before that price run began. It took a while. There was like a lag effect for the halving to have an effect on the price. And so it's entirely possible to me that that would occur again in this particular time frame. As I said, Bitcoin's a wild animal, and you just don't know on any given week, day, month what it's going to do. I mean, it could go to 50, it could go to 80. I mean, I have no idea. I will say this. I will say this though. I have great confidence that in a year or two, it's going to be much higher than it is today.
Let's take a minute to review the most recent events in the Bitcoin industry before digging deeper into Lawrence Lepard's insightful viewpoints. With Bitcoin trading between $63,000 and $64,000 at the moment, enthusiasts are hoping that by the time of the second halving event in 2028, the cryptocurrency will have crossed the $100,000 threshold. Prominent experts in the cryptocurrency space, including Mark Yusko, share this confidence and predict significant price increases for Bitcoin after its halving. Different people have different expectations. Some believe that Bitcoin will reach $150,000 to $200,000 by the end of the year or during the current bullish cycle. Respected financial experts like Michael Novogratz and Robert Kiyosaki are joining the chorus of optimism over Bitcoin's potential and have set price estimates that exceed the $100,000 mark. The consensus among experts highlights the increasing recognition of Bitcoin's importance as a valuable asset in the current financial environment. Let's go back to Lawrence Lepard and consider things from his point of view.
But Bitcoin's a measure of liquidity, and the NASDAQ is tied to liquidity as well. So it's going to take time for the two to separate. But I do believe over time they will separate. But, you know, if they print a lot more money, I mean, my new base case, I've kind of revised this. I used to think we were going to have quite a big market downturn and quite a big recession. I'm actually, and maybe we will, you know, I'll be wrong again, but I'm now, based on what I'm seeing, I'm now kind of starting to think, you know what, we're actually not going to have that big a downturn, that big a recession. We're going to have a pretty hot economy. It's going to be pretty healthy. The stock market could go higher. You know, there'll be a lot of good things happening with one exception. We're going to have serious inflation, you know, because they're going to have to grease the monetary skids. The velocity is going to pick up. And with those changes, you know, there's no way you get out of this inflationary trap. And so it's entirely possible that the Fed ultimately starts thinking maybe they have to hike rates further. I don't know that they'll do that. But, you know, as you pointed out earlier, you know, they've certainly backpedaled from a lot of rate cuts to very few rate cuts based on the strength of the economy. And so the new data that we all have, because we kind of all thought there's got to be a recession coming here, and there hasn't been in a big way yet, right? Who's the sucker at the card table? It's the bondholders, right? I mean, look at the TLT, which is the 20-year bond ETF. I mean, I think that thing's down 40 or 50% from its all-time high a few years ago. And sadly, I think it's going to get worse. So, you know, you just, in an inflationary environment, if you go back and look at the 70s, you know, you wanted to own oil, you wanted to own gold because they both benefited from inflation. You did not want to own bonds. Henry Kaufman called them certificates of confiscation. If inflation does what I think it's going to do, the only way bondholders are going to be willing to hold bonds is if the interest rate is higher. Now, I say that, and then I'll add a caveat. And the caveat is, I think at some point the Federal Reserve steps in, realizing that if they let interest rates get too high, you know, everybody and their brother is going to be bankrupt, including the federal government. I mean, the federal government kind of is bankrupt, but it'll be obvious that they're bankrupt. And so what I'm describing, of course, David, is yield curve control. So I think that as inflation starts to become more evident to everybody, the bond yields will start to go up. But I think there's a point at which the Fed will say, we can't allow this to get worse. And so we're going to start buying the bonds. We're going to reinstate QE and start buying the bonds and putting them on our balance sheet. And we're going to fix the interest rate at a certain level, that we're not going to let it go above that level. And that'll lead to a lot of balance sheet growth. That'll lead to a lot of monetary expansion. And of course, it'll make inflation worse. But, you know, that's what they will do, because the alternative would be to let those interest rates go up very, very high and choke everything off. And we would have a big crash. And keep in mind, the politicians are always looking to do, you know, they don't think in 10 and 20 year timeframes what the right move is. They think in terms of what can get me elected next year. You know, who cares what happens after that, right? And so if their choice is have a big collapse, and take the pain in order to reset, or kick the can and the inflation's a little bit higher. They always lean on, they'll take the kick the can, but inflation's going to be higher. So that's my prediction that I have a high degree of confidence in, is that we will have higher inflation.
With an emphasis on the connections between liquidity, Bitcoin, and the NASDAQ, Lawrence Lepard offered a thorough overview of the state of the economy today. He predicted that the value of Bitcoin will eventually diverge from total market liquidity, acknowledging the slow process of this separation. Lepard updated his market view, implying that prior projections of a substantial decline and recession would not come to pass as predicted. As an alternative, he predicted a strong economy with room for stock market expansion, restrained by the threat of inflation. Lepard stressed asset allocation in an inflationary climate by drawing comparisons to past inflationary eras, especially the 1970s. He advised against owning bonds because of their vulnerability to value degradation in the face of growing inflation. Lepard emphasized how important interest rates are in shaping the behavior of bondholders, and conjectured that the Federal Reserve would use yield curve management mechanisms to stabilize rates and avoid economic instability. Lepard concluded by expressing great confidence in his forecast of increased inflation and attributed it to possible actions by the Federal Reserve as well as political factors. As investors navigated the complexity of monetary policy and economic developments, his thoughts offered insightful viewpoints. Until next time, happy investing.